The EU could hit Apple with a huge fine after accusing it of breaking new tech rules. That's coming up today on Business Matters. Good afternoon, and thank you so much for being here with me today. I'm your host, Don Ma. Okay, the Dow today ended at a 1-month high and registered a 5-day winning streak. So all this, meanwhile, investors looks to be rotating out of AI-linked stocks, with the S&P 500 and NASDAQ hanging lower on the rotation of technology stocks. So the biggest event on investors' calendar for the week is, of course, Friday's personal consumption expenditures price index report. And that's because it is the Fed's preferred measure of inflation. So except for Nvidia and other chip stocks, the rest of the market is behaving positively on the expectation of the possibility of a soft landing here in the United States. Other than markets, Boeing today could be facing criminal charges. This is according to a Reuters report. Sources are saying that prosecutors are recommending the move after finding the plane maker violated a settlement related to 2 fatal crashes. So Boeing had been shielded from criminal charges over the loss of 2 737 MAX jets in 2018 and 2019. Under the terms of a deal agreed in 2021, the company avoided prosecution for conspiracy to commit fraud over design flaws with the planes. And that was in return for overhauling its compliance procedures and submitting regular reports. It also agreed to pay $2.5 billion to settle an investigation into the crashes. Now, however, the sources are saying that prosecutors have now concluded that Boeing did not honor the terms of the deal. And that follows the mid-air blowout on another MAX jet earlier this year, which revived concerns over the firm's quality controls. There was no comment on the report from the Justice Department or Boeing, which has previously insisted it met all terms set by the 2021 deal, though it is not exactly clear what charges might be brought, with possible penalties, including a big fine. Also, the European Union hitting Apple once again with antitrust allegations, and this time it could result in a record fine in the tens of billions. Here's the story.
The European Union is launching new antitrust accusations at Apple. The EU says the company is limiting how much developers can tell users about content outside the App Store, violating its new Digital Markets Act.
Developers should be able to steer consumers to alternative offers, cheaper options outside of the App Store.
Apple faces a fine of up to 10% of its global revenue. This could go up to 20% for repeat infringements.
They will eventually come to some kind of deal because, of course, we know that Apple's revenues have been declining year on year. Having to take this huge hit, this 10% of their global revenue, is not a small financial penalty.
Wasim Mirza is the host of the Future Tech Show. He says Apple will likely face a record fine, far exceeding its previous $2 billion fine in March.
Lawyers like to shake money loose, and Apple makes a ton of money.
Financial expert Vijay Marolia says he doesn't believe Apple is acting unfairly in this regard. Apple defended itself, saying it's confident its plan complies with the law. Marolia doesn't think that'll stop regulators.
People are catching on. It's almost like a domino effect of regulators. Once they see the money coming loose, or once they see that, wait a minute, this might actually work, then they just, it's almost like a wolf pack.
Marolia says he believes Apple will appeal. This would send the case to the EU's Luxembourg-based General Court, where a ruling could take several years.
Now let's talk about a cyber attack that has put the brakes on the car industry. CDK, which puts digital management systems in place for dealerships, reported a major hack last week. Now it says the restoration process has already begun, but that it's going to take several days to complete. In the meantime, car dealerships say they have had to use other ways to process sales. They've been even forced to go back to using trusty, old-fashioned pen and paper. Dealership chain AutoNation said the outage has been disruptive and adversely impacted its business. Other dealerships reported a similar sentiment. Interesting new partnership between retail giant Target and online shopping giant Shopify. So if you already have a trendy store or some hip products on your Shopify e-commerce website, you may now be able to list those products directly on Target's online marketplace called Target Plus. You could even find your products on Target shelves. This is an interesting new opportunity for Shopify stores looking to get in front of more people. It's going to help also Target keep its online offering a little fresher. CNBC reports that Target Plus only has 1,200 third-party sellers. Compare that to Walmart's 132,000 or Amazon's 2 million. Both companies will be hoping that the deal will boost sales. Shopify stock is down 17% this year after reporting poor earnings in May. Target's online sales increased 1.7% in the first quarter, but that was the first gain in over a year. Now, when you consider company earnings, U.S. stocks look very overvalued right now. But one research firm says, as expensive as stock prices look, they may not fall anytime soon. Evercore ISI says the AI revolution and the Federal Reserve potentially lowering interest rates are positive wins for the stock market. However, others say we're simply in a period of exuberance, and this exuberance could lead to a major bubble like the one we saw before the tech market crash in 1999. So about this topic, I spoke to Tavi Costa, global macro analyst at Crescat Capital. Tavi, thank you so much for your time today. Appreciate you coming on again the show. So you recently said that the S&P 500 is very overvalued. Just to explain to us, what do you mean by that, and what is your concern?
My concern is not necessarily on profitability of the businesses, but really how we're valuing that profitability. Meaning, if you look on a PE ratio perspective, and not even a PE ratio, but a price versus the forward earnings of these companies. Basically, what an investor is paying today is a very high multiple in order for those companies to deliver on those estimates for their fundamentals. And this is the type of environment that we tend to see during periods when interest rates are really low and you're able to sort of justify a higher valuation. But we're not in that environment again. We're not in a 0% interest rate place that we were, a decade or so ago, or even 2-3 years ago, I guess. But markets are very expensive. They have been for some time now, and I don't think that that's really where the opportunity lies ahead.
So you think this price right now we're at, it's not justified? Are we looking at a bubble here?
Yeah, I think that's cyclically speaking, we have been in a bubble for some time. I don't want to sound like the alarm today. I mean, it's been there for some time now. We as investors don't really know when things pop, when things will, sort of go back to the average valuation that we tend to see historically. But what we do know as investors is to try to avoid these types of inflated valuations. Does it reward you as an investor deploying capital for the long term to be really focusing in technology companies and AI for the next 5 years? I don't think so. I think things are already priced for perfection, and we need to be a little bit more aware of the risk and the potential for a recession or anything like that. And there's other things you could be putting your capital into that are really cheap and actually do very well in an environment like we are today. And I think that's commodity businesses and others. So that's why my focus has been there.
Let's talk a little bit about tech and NVIDIA, of course. So it is very expensive, but it has gone up, NVIDIA that is. It has gone up 150% or 160%, something like that this year. I mean, you just have to participate, right? Otherwise, you'd be missing out on that.
You don't have to participate. I mean, one of the best investors in history who died recently was Sam Zell. And Sam Zell was very famous for getting out of things early. There are other sectors that have been neglected for a long time. Let's say mining industry, for instance. If you look at the estimates out there in terms of what it could be that those companies could be returning in cash flow in the future, people are very depressed in this overall industry that they barely put any numbers that are optimistic. And so, the chances of that being wrong and maybe those companies starting making more money than what's estimated is what really ultimately reflects into the present value of these companies. And then you see those big pops in stock prices. I'm happy to, step back and look for other things that I believe will, be much more opportunistic for the next decade.
All right. And another thing that you said recently regards fundamentals. You said something along the lines that people who think fundamentals don't matter right now will be in for a rude awakening. Can you explain that a little bit further? And when do you think fundamentals will start to matter again?
Yeah, I think that's very in line with the answers I've given, because we're going to go back to the places where value investing approach becomes prominent again. Fundamental analysis, but also, just look at the attendance of earnings calls, of analysts attending earnings calls. Very few people attend calls today. And that's because essentially markets are not caring about that sort of hard work, understanding the fundamental of each of those businesses and how to really value them properly. And that's an euphoric type of market. Those things don't last. Just, if you look throughout history, when did euphoria really last? It doesn't. I think it's definitely a bubble. It's just a question of when things pop. And we as investors just need to avoid the risk here.
Well, all right, Tabby, thank you so much for your advice today. Pleasure having you on back.
My pleasure. Thanks for having me.
Now, let me ask you this. Have you been happy with how much you've been able to put aside for retirement recently? Well, investment giant Vanguard says 401k saving rates are still at record highs. It says that Americans on average put about 11.7% of their income into their 401k last year. That includes contributions from their employers. So Fidelity suggests that rate is even higher, averaging at 14% already this year. So despite inflation and rising consumer debt levels, it seems many Americans are still able to put money aside for the future. But it seems like men are doing all the savings. A new report suggests that women in the U.S. have just 1/3 the retirement savings of their male counterparts. Prudential Financial found that men have saved a median $157,000 for retirement. Women, on the other hand, have saved of only about $50,000, and this was based on about 900 adults between the age of 55 and 75. Prudential's CEO said women have a more challenging time saving for retirement. She cited inflation, housing prices, and changes in tax policies as some of the main reasons here. And homeowners in the U.S. aren't the only ones struggling with an unaffordable housing market. Renters are also bearing the brunt of it. A report from Harvard University showed both homeowners and renters in recent years have become increasingly burdened by climbing housing costs. It says that while renters have been rising faster, rents, that is, have been rising faster than incomes for decades, the pandemic-era surge in rent prices produced an unprecedented affordability crisis. Also, meanwhile, the Treasury Secretary is set to announce plans today to increase the number of available affordable houses in America. It's blaming high home prices, at least in part, on there being too few homes on the market. Now, as part of the new initiative, the Treasury will provide $100 million through a new fund to support housing financing. Another investment will be to boost the federal financing banks of financing of housing. Rising mortgage rates and home prices have been major hurdles for first-time home buyers since the pandemic. Although prices have begun falling in many parts of the country recently. All right, good point to take a break now. Coming up soon, Beijing gives Europe a deadline and wants the EU to scrap tariff plans on Chinese electric vehicle imports. And a blaze at a South Korean lithium battery plant kills 22 workers, mostly Chinese nationals. We have that and more in just a bit. All right, thank you very much for staying with us here today. Let me just go through some more stories with you. Now, showing on your Paramount Plus streaming plan is inflation, it looks like. Starting August 20th, new customers can expect to pay $1 more per month for Paramount Plus with Showtime and $2 more a month for the Essential plan. So existing customers won't feel the pinch right away, but if you are a Paramount Plus with Showtime subscriber, get ready to pay more from September. Paramount has been cutting costs to try to boost profits, and it seems like that's the reason for the price increases too. And Under Armour has agreed to pay $434 million to settle a class action lawsuit. Shareholders accusing the sports apparel maker and its CEO of intentionally misleading them about the company's financial health, specifically about its revenue growth. Under Armour added the statement is not an admission of wrongdoing. As well, UPS will sell its Coyote logistics business unit to RXO for $1 billion, the company said on Sunday. RXO helps shippers and carriers move freight. UPS's CEO says the sale will allow greater focus on its core business. The cargo ship Dali headed out of Baltimore for Virginia today. That's nearly 3 months after it lost power and crashed into the Francis Scott Key Bridge, causing it to collapse. A National Transportation Safety Board investigation found on March 26 the ship experienced 2 power outages in the hours before it left the port of Baltimore. The agency is still investigating what caused the electrical failures. All right, powerful explosions set a lithium battery factory on fire in South Korea today. 22 people were killed in the fire, and among them, 18 were Chinese nationals. The fire department said it was one of the country's worst factory disasters in years. The fire began in the morning and burned out of control for nearly 6 hours. The factory is run by manufacturer Aerocell in the capital, Seoul. A series of battery cells exploded inside a warehouse. It is still unclear what exactly triggered the explosion. South Korea's president visited the scene of the accident, and the country's interior minister called on local authorities to take steps to prevent any hazardous chemicals from contaminating the surroundings. All right, some China-related stories today. The country wants the EU to drop its new tariffs on the country's electric vehicles. So the tariffs of up to 38.1% are due to kick in next week, while the bloc investigates what it says are excessive subsidies. China says the tariffs are a mistake, arguing that its EV industry has grown thanks to advantages in technology and other factors, and not state support. Now, the two sides have agreed to resume talks on the matter, according to Chinese state media. However, experts do not expect the EU to drop its plans during the talks unless China eliminates all issues flagged by the EU. And authorities from China have hinted at possible retaliatory measures on Europe, pork imports, and more. The EU tariffs are driven by concerns that a flood of cheap imports from China could harm European automakers, and the US has already quadrupled its tariffs on Chinese EVs over similar concerns. Now, it looks like weak demand is continuing to drag on economic recovery in the world's second largest economy. China's fiscal revenue fell for the first 5 months of the year from a year earlier, according to official data. Now, Finance Ministry data also shows that fiscal expenditures rose during this time. China has pledged greater fiscal support to prop up the economy. And based on Reuters calculations, fiscal spending grew 2.5% in May against a 6% rise in April. Beijing has kicked off sales of more than $135 billion in special treasury bonds and launched government-subsidized initiatives. Now, a hacking group that is likely from China besieged Taiwan with cyber attacks for months, according to cybersecurity company Recorded Future. Sectors targeted include government, education, technology, and diplomacy, and the cyber hacking group was observed attacking over 70 entities between November of last year until April. The attacks coincide with the lead up to Taiwan's presidential election and then the lead up to the new president's inauguration. Recorded Future says the attacks matched patterns seen in the activity of Chinese state-sponsored hacking groups. All right, moving on from that. Can't pay full price for pizza? Well, no problem. Newman's Own is introducing its Pay What You Want pizza truck. Now, customers can try the company's pizza offerings, pay what they like, and the money goes to the Newman's Own Foundation to benefit children in need. So the pizza selections will include a variety of crusts and toppings based on local availability, and the truck is headed to 10 major cities, including like New York, Boston, and Chicago. We can follow its travels on the company's website or social media. Newman's Own is the food company founded by the late actor Paul Newman to generate money for charitable donations and organizations. Now, before we go, Steve Lance and Tiffany Meyer will be presenting an exciting and well-rounded analysis of the first presidential debate. So watch the first half of The Nation Decides at 8:30 p.m. Eastern Time this Thursday, June 27th, and stay tuned for the live CNN presidential debate on CNN or simulcast on NTD News at 9 p.m. Eastern. We'll jump back with the second half of our show right after the debate, so please don't miss it. And with that, that's all the stories we have for you. Thank you so much for watching. If you have any feedback for the episode, please feel free to let me know. And to do that, you can email us at business@ntd.com or just simply leave a comment online. I do read them. And as I always say, business matters. We'll see you tomorrow.